Hello everyone, welcome to another interesting episode of Together We Learn. Together We Learn started off as an internal learning session where we wanted our team members to learn something beyond the realm of work that they're doing at Vite. And today we've done multiple different episodes and multiple different videos, and we realized that the general public also would love to learn these new things. So before we get started, I also want to quickly introduce you to what Vite is. Vite Money is a company which takes care of financial wellness for every single individual out there. Our priority is to help you take smart financial decisions. So whenever you have any questions, you can come into the application. It'll give you a plan for the next 2 years as to where you can save, how you can save. And if you have any questions, not only can you talk to the experts who's in-house with us, also you can reach out to our own team who can tell you how to make these executions happen better, etc. All right. So let's quickly get started with today's TWL. So today's topic is nothing but IPO explained in detail, and it's going to be divided into two parts. And we are going to talk about the part one, right? So initial public offering. So we've all heard of this. And most of us heard of this because of LIC's IPO, because it was one of the largest IPO in India. And all our parents kept telling us to go buy the LIC IPO share or participate in that IPO, right? But today's topic is more about, we want to deep dive into what IPO is, the eligibility criteria and the process involved in someone going IPO. Generally, companies are the ones which will go IPO. Similarly, what kind of pricing structure is going to be used for it, right? So these are the topics that we're going to cover in today's conversation, and let's quickly dive right into it, right? So if you look at the entire conversation, initial public offering is the first sale of a stock, a privately held stock, which is coming to the public, right? Which means, let's just say there is a company X, and the X company has been owned by three directors, right? They own this company and they own like 33% of the company. Now, suddenly from privately held, they want more money. So they are raising it from the public. They're telling that I'm ready to dilute 15% of my company and give it to the public. And that's when the initial public offering is kind of made. So when a company decides to go public, so during that phase, just before it gets listed, right? When I say listed, that's when you can see the stock market movements happening on BSE and NSE, which are two exchanges where the listing would happen in general. So this is a place where when it reaches the exchanges, it's called the secondary market. But just before the listing, it's called the primary market. And that's where all these initial listing would start with. So if you see here, the banks are the ones who are negotiating this entire deal. It could be banks, it could be underwriters, it could be consultancy companies, right? For example, no IPO can happen without the help of banks like HDFC, or let's just say companies like JP Morgan. So they all are needed to evaluate the company, help the company build some credibility for the public, right? And that's why you can see that there are these banks involved in this process, and they contact the corporate, so the corporate contacts the banks, and then they finally decide to sell it to the investors, right? And there could be a bunch of investors that they could sell to, and when they sell it, the money that comes from that is pushed into the corporate organization for them to grow and build their entire brand. All right. So that's how the entire primary market or the IPO process would typically work. So we all know about how an IPO works in terms of buying it. Most of us do. But do we know that there's a lot of eligibility for a company to come before they come into an IPO? I'll give you a small example of certain companies who are in the newspapers now. It's public information that OYO has been told by the SEBI to wait for their IPO, right? So these kind of things happen because they might not have met certain eligibility criteria. And we're going to jump into a few of these criteria, right? So the net worth of the company on a consolidated basis should be more than 1 crore. Minimum of 1 crore should be there, and should be there for the last 3 consecutive years, right? Now, apart from this, the net tangible asset, which is nothing but the cash that they have, the machinery that they have, the properties that they own, all of these things put together should come around 3 crores, and this should be the case for the last 3 years. And one thing, like I said, cash also plays a role in this, but only 50% of your net tangible assets should be in cash, right? Now, further, the total value of the IPO, which is nothing but certain companies will be like, I want to go IPO for 500 crores because that's how much money that they need to run the organization, or the money that they need for expansion, right? So in those scenarios as well, it can't be 5 times more than the net worth of the company. So that's something that you have to remember. Now, jumping into the launch of the IPO, generally the operating profit, right, which is nothing but once you operate, the profits that you get, that operating profit has to be at least 15 crores without tax in each of the 3 years among the previous 5 years. So any 3 years, it has to be more than 15 crores, right? So that's something that you have to realize. These are the criteria that are there. If you guys have any questions, please do drop a note so that we can quickly answer them through the chat itself, right? Now, further, if a company has changed their names, for instance, I do remember there are some companies who have changed their name from X to Y, right? So in that cases, the Y company should have made 50% of the revenue in the last year doing activity in the new name, right? So that's also something that is very important for you to show, because just because they change the name, they can't be dropping their revenue margins. That's also quite important. Now, coming into the process that is involved in getting this IPO out. So let's just say first and foremost, it's going to be having like an investment banker or underwriter to play a major role. So you need to appoint them because their job is to decide if everything is ready for you to go into an IPO. Because as a process set by the government, it's not easy for you to go into the IPO without having certain checklists. Today, if you see, even when it comes to IT filing, you have certain checklists to tick off, right? Similarly, those checklists need to be defined, and these underwriters and these investment bankers, they do an amazing job at deciding and documenting and helping you prepare for the IPO. So once they are done with that, then it goes into registration of an IPO. And pretty much what happens there is that they have to provide a prospectus. They have to give a prospectus to the exchanges telling them, or to the SEBI. It's not the exchanges first, it's generally to the SEBI first, where they say that, okay, this is how the company runs. These are the profits that we did. These are the gaps that we have in the company at the moment, which we would like to fill up, right? These details are given to the company, and then the SEBI would say, okay, is it good to go or is it not good to go, right? So once the cooling period is done, then the next step is for us to take this prospectus and the details and start applying to the exchanges. So there are 2 exchanges which are quite popular in India. There are actually only 2 exchanges. Number one is BSE and the other one is NSE. BSE is nothing but Bombay Stock Exchange, which is in Bombay. And NSE is nothing but National Stock Exchange, which is also in Bombay, right? So the difference between both of them are not much. BSE started way back in 1885-ish, whereas Bombay National Stock Exchange, which is NSE, started in early 1990s, right? So that's when both of these things started. Now the difference comes in when an SME, which is a small and medium scale enterprise, when they come into the market, they can also go public, but they can go public in the BSE and NSE version of SME stock market or stock exchanges. So otherwise, it's almost the same. Some companies do list only in BSE, some others do it in NSE, some do it in both, right? For example, Reliance does trade in both these exchanges, right? So now they have to apply to these stock exchanges. Now, post this, the most important thing is nothing but creating that buzz. Today, there is going to be Tata technology or digital stocks that are going to come out soon. The IPO is going to be released soon. And as part of this Tata IPO, there's a lot of buzz being created around it. So these are buzz created by the PR teams of these respective companies. Now, once this buzz and everything is being created, the next important step is telling the public that, hey, I am requested for 500 crores that I want to raise from the public. That is my IPO value. Now, if that is my IPO value, what should be my individual share price crossed? So that's something that the company has to decide, and they have to decide it based on pricing models. And I'm going to talk more about these pricing models in a minute. And then finally, once the pricing model is decided, there are two ways in which you can decide. After that, it's just simply you just launch the IPO, wait for the people to subscribe, and once the subscription is done on a specific date, it will get listed, and then from that listing date, you will end up seeing whether the stock has increased or whether it's decreased, and make some good money out of it, right? Now, pricing of an IPO. There are two different ways. The most common one is the fixed price method, and the other one is book building method. So fixed price method is the most common one used, and it's nothing, just like how the name says it, the company will fix a price, and within that price you need to buy the stock or buy that particular IPO value, right? And I'll tell you more about how that buying process will look like. Now, the other method is book building method, wherein you would define like a floor price or the base price, and also the highest stock price, which is called the ceiling price, and the difference of it is something that is taken into consideration to decide what the final price, listing price of that stock would be, right? So for instance, you would have seen a lot of companies saying that you can bid anywhere between 720 to 780, right? And they would bid, and the most number of bids which are falling under a particular margin, that's how the final listing price would be decided. So that's the book building method. All right. Now, moving into an example of what happened with IdeaForge IPO pricing. So IdeaForge was one of those rare findings where a lot of people made a lot of money in it. So these are the few terms that you should remember, because these are terms that we share in our market updates. So we do have a small community called the TWL community, which is on WhatsApp, where we share these IPOs which are coming up, the important market news, etc. Right? So in the particular listing, I'm going to pick out one of those examples, which is IdeaForge's example. And you can see the date would be mentioned, which is the date when the IPO is available for the public to plan. Then the listing date, which is basically a date later after the subscription is done. And then the face value of the stock is nothing but, let's just say when a company first starts off, they would have a value that they would have defined, right? So that is the face value of the stock, which is not the stock at which we are going to buy, which comes under the price. So for example, in IdeaForge's case, it was anywhere between 638 to 672 per share. And it's important for us not to buy single. They want us to buy it in bulk, right? So pretty much most of the IPOs, an individual can invest up to 2 lakhs. For example, in case of IdeaForge, suppose you can only buy an IPO for, if you're buying 22 shares, which means 22 into 638 or 672, whatever value that you're bidding for, right? And then post that, they'll also define what is the issue size, like how much are you planning to issue, like is it worth 600 crores or is it worth 700 crores? That value is also given. The total issue size is then further divided into two important things, which I think most of us aren't aware of when it comes to an IPO. Some of us might have learned this or might have come across this, but the others aren't. So the first one is called a fresh issue, right? In the fresh issue, what happens is you are saying that the money that you're giving me, let's just say 700 crores is the total issue size. Out of that, 300 is something that I would need for me to run the business. I'm going to use that money to run my business. Whereas the offer for sale is nothing but there might have been other investors who would have invested early on, right? They would probably want to leave the company or they would want to cash out. So offer for sale is when they would want to cash out. And a good example is Paytm. So SoftBank actually cashed out when Paytm went public, right? So that came under offer for sale. So in the last couple of years post-COVID, numerous amount of IPOs have come out, and most of them came out mainly for offer for sale, right? So that's something that is very important for us to note. It's not for them to build the business, but just to buy out or sell the existing or settle the existing investors who are part of the business. Since I use the word investors, I think it's also important for us to know who are the different types of investors involved in IPO, right? Number one is retail investors, which is nothing but you and me who's watching. So we have no relationship with the company, but you just want to jump in and get an opportunity to make some money, right? That's where we kind of fall under the retail investor category. Then comes the NIIs, which is nothing but non-institutional investors. So any retailer who's ready to invest anywhere between 2 lakhs to 10 lakhs comes under NIIs. Even under that, there is two different categories, which is small NIIs and then big NIIs, right? Anyone who wants to do beyond 10 lakhs, they come under big NIIs. So big NIIs are again retailers, but who want to invest more, right? Now, once that is done, the other layer of investor category is qualified institutional investors or QIBs. So this is nothing but insurance companies, AMCs, which is just nothing but the asset management companies who manage different mutual funds and other components, and even let's say trust funds, right? So they also come under QIBs. Now post this comes employees. So existing employee of that company can buy the share at a discounted price, right? Then comes shareholders. Shareholders are nothing but, let's say, if Reliance owns Jio, then the stakeholders of Reliance will have, who are shareholders of Jio, will have certain privilege to buy these stocks as well. And then finally comes anchors. Anchors are people who are angel investors, those folks who were there with you from the beginning. They will also get special privileges to buy these stocks upfront, right? So these are the different types of investors that you see in an IPO, and that kind of brings us to an end of what an IPO is and what IPO, how the process of an IPO works. And this is the first part of the IPO explained process, right? Now that you understand the different types of investors, I think I'm going to wrap it up here and then take the second part of the conversation into a different video, right? So today's conversation, where we looked into what an IPO is, what is the process involved in it, what is the eligibility behind it, and also the different types of investors, is a good amount of content for you to kind of process. And if you have any questions, any thought process feedback, please do drop in. And if you think any of the information was misrepresented, we are more than happy to point it out. We all do make mistakes, so we are more than happy to make those corrections and make the next version much, much better and more detailed based on your feedback. All right. So thank you so much for your time, and please continue watching and supporting the channel by subscribing and liking the video, so more people who would love to learn these things can also learn it. Thank you.